Guess I should unmute myself. Good morning. This is Jim Barlow, OakTree Premium Finance. It's a good morning. Haven't had too many fires. Let me go to the PowerPoint. I think you'll enjoy the presentation today. I hope so. Excuse me while I get my screens set. All right. Okay. I'm unmuted. We're ready to roll. What is Kaizen? Essentials for understanding. Yes, I need to get going on my knowing what I'm doing today. All right. Okay. Here's the definition. Kaizen is a leveraged index universal life strategy. The word Kaizen stems from a Japanese words meaning continuous improvement. Kaizen embodied a philosophy rooted in perpetual enhancement. Inspired by this ethos, the creators of Kaizen named their leveraged index universal life strategy Kaizen, embracing ongoing evolution and meticulous refinement in their approach. That's exciting. I like that. Let me introduce this in this way. Just this past week, I sent an email to Travis. He's my go-to guy inside NIW, the founders, the designers of Kaizen. And I said, Travis, could you give me a guess? That's probably not proper English, is it? What percent of investment advisors understand leveraged IUL, that's short for Index Universal Life, and what percent of life insurance agents? Thanks, Jim. Here's what he said. Hey, Jim, based on my experience, very few agents understand or sell premium finance. The primary reason for this is KZ. That is short for NIW's Kaizen internally. KZ is only sold to individuals that have a $200,000 annual income, which only represents 6 to 9% of all working American income earners. I'm surprising you with some of the notes from my presentation. Sorry. Traditional premium finance requires a minimum of 10 million net worth, and this group represents less than 1% of working households. So the market to sell PF means premium finance is extremely small compared to everyday life insurance customer. In another email a message I talked with Travis, he said, Jim, you're trying something that hasn't really been done in our country. You are specializing in Kaizen. Nobody does that. It's only a piece of their pie, as this email kind of references. They don't spend that much time understanding it because they're not going to be selling a lot of it. Well, he also kind of referred to, if you succeed, there is a little bit of if in his voice, you'll be our poster child because of what I'm doing. I'm still going to do it. I'm semi-retired. I spent a lot of time studying Kaizen and premium finance. I really think I might be one of the foremost experts in the country. And certainly I have all the resources and understand where to get the answers. But here's the rest of his email. I think there is a larger gap in the fundamental understanding of how Index Universal Life works. We have more agents and clients expressing their lack of understanding of how IUL works, index strategies, how IUL options are priced, how loans work, etc. In my opinion, I think we've spelled that wrong. This is a bigger issue than how many understand leverage side of the business. This webinar is really designed to be the first appointment, as if I'm sitting across the table with someone for the first time, to give them the basics, to help them understand the essentials of Kaizen. In my March 1st newsletter, I referred to this quote. I actually had a video. You can look at it. Maybe some of you will remember this. Let me read it. Hopefully you can follow as I read it. Reports that say something hasn't happened are always interesting to me because, as you know, there are known knowns. There are things we know we know. We also know there are known unknowns. That is to say, we know there are some things we do not know, but there are also unknown unknowns, the ones we don't know. And if one looks throughout the history of our country and other free countries, is the latter category that tends to be the difficult ones. Donald Rumsfeld, Secretary of Defense, 2002. Anyone remember that? Maybe this is an easier way to say it. Mark Twain said, "It ain't what you don't know that gets you into trouble. It's what you know for sure that just ain't so." I think that's a little bit on life insurance. Can life insurance really be an investment? As an investment advisor for 35 years, if you had asked me a bunch of years ago, I would have said no. Buy term and invest the difference. It's not an investment. Well, I'm hoping I can show you something that's really quite fun and exciting. To know what you know and what you do not know, that is true knowledge. Half of being smart is knowing what you are dumb about. It's better to be roughly right than precisely wrong. Well, let's get going. A few days ago, or actually a while, over a period of time, I started writing down what I think I would like in a retirement plan, in my perfect investment plan. What advantages and features would I want to have? And by thinking through it a number of times, I kept adding to the list. And here's the list. I would like capital preservation, no downside risk or negative years. That's pretty demanding. I want tax deferred growth. I want tax deductibility, pre-tax contributions. I want market driven rate of returns. I want tax-free income. I want flexible withdrawal options, enhanced retirement income, protection in case of death, disability, or long-term care needs, low fees and expenses, employer matching contributions, creditor protection, diverse investment selection, account transferability, estate planning tools and features. Do I want my cake and eat it too? Yeah, you probably do too. Well, what do most investment options, how many of the, not all of them are going to have all of them. It's impossible. Most investment options might have half. Well, Kaizen has kind of only 2.5 that they don't have. It's not deductible. It's not pre-tax contribution. Sorry. And down at number 9, low fees and expenses. Initially, it is not low fees and expenses, but down the road, it will become the lowest fee and expense investment account you have, lower than anything. And number 13, account transferability. Is locked in. So those are the things that it doesn't match, but wow, that's a good thing. A lot of those that it does hit, which is pretty amazing. We're going to go through these. How we use Kaizen. Its number one use, the first on the left, the blue, retirement income. As a retirement income strategy, I don't know a better one. We're going to show you how this works. Next, the green one, executive employee benefits. The blue are personal use, the green are business use. But this employee benefits is really tied to retirement income. This is where a company says, "Ooh, I like this. I want to offer this to my employees. I want them to stay, and this will help them stay with me forever." Third, transferring wealth, gifting strategy. It's, you can just hand the money to one of your kids and they can spend it, but it's the way to give something to their future. This is mainly maybe guaranteeing them a cool retirement. Fourth, you could use it just as your life insurance approach or your infinite banking. I'm not going to go into infinite banking, but this is where you forever and ever borrow money from your insurance and don't pay the banks. Fixed income alternative. Maybe better than bonds. Sometimes bonds are not that cool. Buy, sell, succession planning, helping a business have a plan in case someone passes away or uh, someone wants to get out of the business and your partners. Key person protection. That important person that's really important, you protect them. These are the ways you can use Kaizen. That eighth one, the gray, is traditional premium finance, which I do, but it's not Kaizen. But it's kind of a cousin. Those are the uses of Kaizen. There's 6 key features and advantages of Kaizen that I want you to understand. We're going to go through them maybe slowly. I've only shown you 4 right now because the 5th and 6th are Kaizen. These first 4 is really index universal life. So let's cover these 4. First, potential tax-free withdrawals. Access to cash value using tax-free loan policy loans. Life insurance, if you didn't know, pays the beneficiary tax-free. That's a basic principle of life insurance. If you put $100,000 into a cash value policy and it's grown to $500,000, you have not paid taxes on the growth. We call that tax deferral. And if you died, it all would go to your heirs tax-free. You'd totally avoid the tax. This is IRA, the IRS codes 101 and 7702G and all those numbers. But this eliminates tax risk. And in with those same codes, you can borrow from your policy. Cash value access by borrowing from the policy. This is how we can give people a tax-free retirement. Number 2, protection from market declines. 0 downside risk, no negative year returns. Eliminates downside market risk. Let me go over this one a little bit. So, index universal life policies. When you set in a premium, a portion goes to the cost of insurance, and the rest goes into the general account of the insurance company. Insurance companies have a lot of money in these general accounts, not just millions, maybe even billions, depending on the size of the company. These are protected bonds and mortgages. They're not taking risk with this money in this general account hardly at all. But the majority goes there, but a portion is held out to buy options and derivatives with. For example, you put $100 goes in and $95 would go to the general account and $5 would be available to buy some options. These options mimic a market index. returns from these contracts boost the policy's cash value, giving you potentially great returns. Let's go back to this chart. So there's really, this is number 3, growth potential. Maximizing returns and upside crediting. There's 2 major types of approaches, the capped indexes and the participating indexes. An example of a capped is you put that replicate with that 5%, the Standard & Poor's 500 index, and you get with a cap. So if the market does 15, you're capped at 12.5. Just for information, this strategy has averaged 8.2 for the last 10 years. Another approach is participating indexes. Bloomberg US Dynamic Balance 2 ER Index, a mouthful, is from Allianz. Their 10-year average is 5.4, and a participating index doesn't have a cap. It has a participation rate, and the current participation rate is 218.5%. So you times that by the 5.4. So this participating average index at that participation rate would be 11.88. So combining, so you can see the protection of number 2, no downside, and the excesses of investing indexes where you can get above market returns. Next, we have the life insurance and death benefits and living benefits. This is pretty standard in the world today. These living benefits can be terminal illness, chronic critical illness, critical injury. It's like buying life insurance, but it's also like buying life insurance with supplements for disability insurance and long-term care. One of our vendors is probably the best living benefits in the country. So this eliminates the financial vulnerability from a lot of things. That's the 4 index universal life features. So let me ask you, we have potentially tax-free benefits, downside protection, no down negative years, upside potential, life insurance with accelerated living benefits. Why not, with these strong benefits, why would we not leverage this investment? Leverage means borrowing. That brings in Kaizen. So in this leverage in Kaizen, we're buying, I actually think this is out of order, but we'll go ahead and explain it anyway. In Kaizen, you have 5 payments. That's the lower left piggies. And the bank that we get involved in the policy is matching your contribution approximately for the first 5 years. And then your payments are done after 5 years, and then the bank has continued to pay what you were paying, and they continue to pay what they were paying for the first 5 years. So that's kind of the representation of a 3-to-1 leverage. In real estate and buying your home, that'd be putting 25% down and borrowing the rest. And interestingly enough, this is without interest payments, loan documents, credit checks, personal guarantees, not even a signature. The way this has been designed, Kaizen, the banks are saying the policy's adequate collateral. We're fine. A little bit out of order. Let me go to this first, then go back. So the 5th to the 6th, the leverage part is 3-to-1 without those things, collateral, personal guarantees, reduce the capital risk, and then 5, the annual payments. That brings you to Kaizen. I want to show you a video. I'm going to go to a different screen. Okay, you're now seeing my website. And if we go to media and we go to videos, we have a group of videos that I like. These are all videos about Kaizen, the greatest wealth transfer, the next big thing, recruit and retain. All these are good videos, but the one I want to show you today is this one here. So let me pull it up and let's watch this short video.
Did you know life insurance has the potential to accumulate cash value? This can be used to supplement your retirement, and it can be funded in 5 short years. Sound too good to be true? Well, pay close attention. You can do this because Kaizen uses leverage to help fund your retirement while providing protection for your family. Most of you are already familiar with the advantages of using leverage. When you provided the lender with your down payment and used your home as collateral, so the lender could loan you the additional amount needed to purchase your home, you used leverage. You qualify for Kaizen in a similar way. You provide your down payment that funds a unique cash accumulating life insurance policy, assign it to the lender as collateral, and the lender will provide up to an additional 3 times more money to help fund your policy. Plus, your policy has death benefit protection with living benefit riders that can provide you cash if needed for a chronic or terminal illness. The surplus funds have the potential to earn interest that is credited to your policy based in part on changes in a major market index, like the S&P 500, while never exposing your policy to the risk of market downturns using a feature called the floor. This added layer of protection is part of the reason why with Kaizen, you never apply for credit, sign loan documents, make interest payments, or provide personal guarantees. Yes, you heard that right. And now you know how the rich always seem to get richer. They have access to additional capital that you don't. Until now, by choosing Kaizen. Isn't it time you stopped chasing rates of return? When everyone knows a successful retirement plan is determined by how much you have saved? And I think we all know the choice you will make when it comes to providing protection for you and your family. So why deny yourself the opportunity to live the lifestyle you deserve, when Kaizen has the potential to offer you so much more?
Well, how was that? So the question I would have, who did a better job? Did I explain it better, or did the video do a better job? So this is the main things about Kaizen. Now, there's the qualifications. It's not for everybody. You already heard that. Here they are. Age range, you must be between 18 to 65. I'm older than 65. I cannot buy Kaizen. One, they're not going to let me buy it, but it also would not work. It works younger ages. Health underwriting. Index Universal Life requires health underwriting. Any life insurance does, but Kaizen requirements are higher. They require standard or better. 3, financial eligibilities, minimum income of 200,000, and a net worth requirement with one vendor. And so this is 6 to 9% of the working American income earners. I hope I haven't bumped you out yet. 4, financial capacity, a minimum annual payments ranging from 20,000 to 40,000 based mainly on age. Allianz introduced a monthly payment option back in 2023, not very long ago. So you need to be able to make a pretty sizable payment for 5 years. Then, this might sound funny, but you've got to understand this. You've got to comprehend it. You got to understand the endurance that you've got to take, the participation. Life insurance policies, especially Kaizen, are long-term investments. This is essential, or it will not work with you. It will not work. And Kaizen commitment, really, you need at least a 15-year, because we have the borrowing. You're putting money in for 5 years. They're putting in money for another 5 years, and we need some additional years for this thing to cook, simmer, whatever you want to use before we start taking an income check. Those are some pretty hefty qualifications. Sorry. This is a chart that maybe it'll help too. I've got a color zone where everyone knows the stoplight. So I think it's a green from 18 to 50. And I put it in a yellow, 51 to 64, because remember that 15 years we just talked about? Well, at 50, 15 years is 65. So, and that's a traditional retirement age. So depending on when you want to retire and also health issues and whatever, and maybe it will not be appropriate for you somewhere in between 51 and 64. And if, oh, sorry, they're doing some work on the house outside. And 65 plus, you just can't buy it. And there is one category of transferring wealth. You have the receiver, it might be junior who's 40, but you as the parent, you can use this transferring wealth strategy for your kids. So that's reason for that bottom section. Let me show you the resources. NIW, the inventors of Kaizen, they created this site called Interactive Learning Information Assistant. ILIA, they call it for short. It's a mouthful. And along the left in this site, there's all kinds of information, a lot of information about Kaizen. It really answers probably 98% of everybody's questions. But the third one down, you see that estimate my benefits. This is one I use all the time. And what you see here is the quick result estimator. All you need to do here is put age and sex and how much you want to put in, and you get a proposal per se. And then there's the custom design on the right. You put in more information, you custom design it. That's where I usually end up. But this site isn't one you can just go to. You have to have a login and password. And I can send you an invitation to have a log and get a login and password. And you can read through the parts on the left. You can put in different numbers and you can play with the results. Fun. Another calculator that I recently put on my website that I designed, I did every part of the design other than the computer technical guy, is a retirement income gap calculator. This is quick and easy. You put in your numbers, probably numbers that you got off the top of your head, and you're going to know what your gap is, what you need to get covered between now and retirement. This is useful for anybody. Send anybody to my website to use this retirement income gap calculator. I'm excited about it. Another thing on my website, not one that you'll use, is an Excel spreadsheet. This is something I also designed to help me compare Kaizen with other investments to see how they compare, how they're working. And this is be fun. I'll show you some numbers in a jiffy, but that's some resources. in the ILIA, you can put in all the numbers, and you can print an illustration, a proposal. These are some pages from a presentation. I put the name of this client is 40D. I should have called it WD-40, but it's a male person I put in, and contributing $25,000 a year, excellent or preferred health. And the initial death benefit at the top there was actually calculated by the Kaizen people. You're really not you're getting the life insurance, but that's not what you target. You're targeting everything else. And down below is kind of a summary of what I've already been showing you: upside credit potential, no negative years, potential growth, tax deferred, tax-free income, all those things. Also, in this proposal, they show you the 5 piggies again and the contributions, and they give you actual numbers. So on the left, we have the 25,000 put in for 5 years. And on the right, we show the exact numbers the bank is willing to put in for the first 5 years, 23,676. And then they'll put in 47,326 for the next 5 years. So over the 10 years, they'll be putting in $355,010. So the total contributed is $480,010. Yours is just the $25,000 per year. And they have a summary result page. And here it is. Let's start on the right. The Kaizen, starting at age 65, will give this 40-year-old a $67,000 tax-free income. And we can do this all the way through I did this through 100. I can pick the age, but I chose 100. And this works, and the total money received from 65 to 100 would be $2,412,000 tax-free. And this is on a $125,000 investment. At this point, a lot of people say, well, it looks a little too good to be true, but it is true. And the protection, the umbrella on the top, shows that at 100, we still have a death benefit of $885,943. That's Kaizen. I guess I should point out, here's the assumptions on the bottom left. We use a growth rate of 6.74. We use an income tax rate of 37, long-term capital gain rate of 20, state income tax 5.5 to do a fair comparison. The far left piggy is if just an after-tax investment, regular investing, making that 6.74. That strategy, same performance, same 125,000. That would give you 24,330 a year, starting at age 65. And by the time you hit 100, you'd have pulled out 875,000. About what the life insurance is on the Kaizen. The middle one is if you bought the life insurance policy without the leverage. This is the index universal life policy. And we're saying this is a worthwhile approach, but we're just saying that with leverage, and we're saying why not, we can expand it. This is a good option, better than just regular investing, but we can expand it. Next, this is another page in the proposal. I don't really want to go over all that stuff on the top. I want to go that little stuff in the middle. See that stress test using historical interest rates policy performance? NIW did as a stress test on every policy, but the 1980s stress test, the 80s were high interest rates. And so what they've done, they did a 1980 simulation assuming a gradual cap increase to 15%. And how would Kaizen perform in this high interest rate and market? And it was 50,250. I'm going to go back real quick. So instead of 67,000, it was 50,250. But the 50,250 is still better than 24 or 39. So even in a higher interest rate environment, this beats the competition. The Great Depression, the one right underneath there, annual supplemental income was 43,550. This is the 1930s, where there is 7 out of 10 years that were negative years. The 43,550 is lower than the 67, but still higher than the 39 or 24. I think that's helpful to know that even in the worst scenarios, this is going to outperform other options. This is a chart that I put together using my comparison Excel spreadsheet. And I added a column that you haven't seen before. But so there's the 67,000 income starting at 65. And there's 23,678, the one on the left. After tax investment. And the one in the middle is if you did it in an IRA, a 401k, how would it be, how much better than just a regular investment? So there's the numbers. And there's the total income from 65 to 100, and shows the balance and death benefit in the Kaizen. So you can see that this does a great job of outperforming. But you saw those numbers, you can't hardly read them. I wanted to not be able to read them because I want to show you those after the fact. On my comparison calculator, I can look at the value any year. So I just did every 5 years from the age of 40 when he took it out. So the after-tax investment without any Kaizen or life insurance have been 145,000 after 5 years. Kaizen on the far right is 106. Wow, Jim, what do you put me into? It's only 106. They would be 145, or the IRA would be 152. Jim, well, let's look at 10 years, 185 to 137. Jim, it's lower. Kaizen's not performing, and the IRA is not performing against that. Okay, well, let's go to 15 years, 236 to 229. Wow, we're closer, but not there compared to the IRA, certainly not there. 20 years, 302 to 308. Oh, the 380, now we're beating the regular investing, not quite beating the IRA. And at 65, 386 regular investing, 538, we're beating it substantially in Kaizen. But the IRA is still behind. But even though it's behind, look at the income, more income it gives. And this is the income, higher income is because of the secret weapon of leverage, borrow money. That's the real beauty of Kaizen. I hope this was helpful. So I can send you an invitation. If you want an invitation to set up a login and password to Ilya, let me know. And I can do that, get some basic information, and we can get that going. That's it for today. To know what you know and what you do not know, that is true knowledge. I believe this is a really cool, better way to invest. There's my phone number, my email, my website, the QR code. I have it there. So if you want to just go to that QR code, you'll have one of the videos, a Kaizen video, and you'll have an explanation on video, and you can just look at that on your own. You can I'm going to post this webinar on my website with my website guy. Hopefully it'll be posted today or at least tomorrow. You can rewatch this webinar. I don't want to take calls today because this is going to be going on the front page of my website, and I don't want to have that there today. So for you, there were I can see for you who are asking questions. Let's do it one-on-one. Give me a call. Be happy to help. There's your introduction to web Kaizen. I hope it's been helpful, and have a great day. Bye.